What's up, my man? You're muted, by the way, sir.
Hello.
Yo, yo, yo. What's up? So, in this one of us, we're gonna be talking about the how to pick the right CRT. Also, about you had a question about SMT, and we're gonna be talking about specific concept that you should be focusing on as a CRT and SMT trader. So, yeah, you see my video. You see my sharing on the Discord.
Yes, I can.
All right. So, before we start,
Are you from
uh,
America?
say it again, please.
I said, are you from America?
Am I from America? Yes, I am.
Oh, cool. I'm from Nigeria.
Oh, Nigeria, yes, sir, man. I could tell from the voice and the killer boy. So before we start, brother, what's up with you, man? I have you started as CRT recently, or how long has it been? How is it going for you? As I said in the chat on the Instagram, and
You
also,
know, I
um,
just
what are you noticing?
I just knew about CRT last week.
Okay.
Watched about it on YouTube.
Yeah, he's about
That's
to release
how
a
I
new
came to
course also, which is very nice. You can watch that on YouTube for free. People usually leak it out, so that should be good for you also.
yeah, that's how I came to know about your own channel.
Uh, all right. So you started last week. Okay. So how's it looking like this week? Did you get many setups, any trades, anything like that?
Maybe I didn't mark one CRT then. I was just confused and I left it.
You're confused and you left it.
Yes.
All right. So yeah, we're gonna fix that problem easily here today. But um, the one thing I would suggest, because since you're very new, so you know Romeo, right?
Yeah, I do.
So let me go share my other screen here. I'm gonna show you guys. I'm gonna share you his courses. Just watch his courses also. I mean, I'm not here to share you mine's also. I'm gonna share mine's also, but focus on him also. Because he's a main mentor here. But let me go and get the um yeah his courses real quick so I can show you here. I'm somewhat bugging
Okay.
here, man. I'm lagging for some reason. 1 second. It's taking so long to load. Okay. Romeo. All right, so let me share my other screen here, so I'm gonna show you the screen. You should also watch this a lot, take a lot of notes because this is actually very important, right? It isn't just about the technicals. It tells you about the psychology, like overall, right? Not just one main thing. So let me share you, and I also talk about. I'll also give you mine. I have my own boot camp, which is for free, which I will share also. Let me share. Let me go and give his first. Where is it at? How can I share? How can I change my sharing? Share your screen. Okay. There. You see a screen, Ra?
It's loading. I can see it.
All right. So first thing you're gonna do is gonna watch this one, the Romeo UTS course, right? University of Total
Okay.
course, right? Second, you wanna
Okay.
watch the Romeo CRT Unlock course. It's very good because over here, what you're gonna learn is specifically CRT based. What a CRT is, how does CRT work, how is the market goes around CRT, which will make you, which will make you, because as you know, if you understand it, it's easy for you to trade it, right? So you don't just go from one strategy to another strategy because the reason people do that is because they don't understand it, right? So once you watch these
Yeah.
courses, you're gonna start understanding the main concept. The next one would be right over here, the CRT right over here. CRT Inner Circle course, CIC course. Watch throughout the whole thing. He has trading
Okay.
examples also. Watch this whole course. Want me to send this right now for you on the Discord?
Okay.
Let me send it to you right now. These are not me. You just watch it, which is very good since you started last week. You would definitely need this. Let me go and I don't have to share this. Share it real quick. Copy and paste it to you here. That would be the first one. The second one would be this right over here. Have you ever watched this course before or no? Have you watched these courses before?
Alright, folks, welcome to CRT Unlocked.
No.
No? Yeah, yeah. So you definitely need to watch this because usually people would watch all of them before coming in. Let me go and share it here. I don't know how do I do. Let me get this right over here. Save to library. Playlist. Yeah, I don't know, but I'm gonna show you this first video, right?
Here is down.
Let me share this other one right over here for you. Let me go. This is the most important one right over here. This right over here is the most important, right? So pay attention to this a lot. This and this, right? So Romeo's Secret of Time and this. Specifically, this is the most recent one and is the most important one, right? This one has a lot of examples also. Shit. He has a lot of examples, right? Him using the same concept that he was preaching on these. These will teach you about the order block, the breaker, the OTE, all of these that you actually need in the market. Now let me share you this also. Let me share you the last one, which would be the Secret of Time.
All right, folks.
All right. So first step to you knowing CRT and total soup and whatever the next is, time also. All right, so that's a thing that you're gonna watch. Also, before we go any further, you should also watch mine. Also, I got mine over here. I got a playlist also of the courses. I got some CRT and total soup secrets, which this is very advanced. If you want to watch this, you can watch it, but I suggest watching this after you watch the courses of the Romeos because this is very advanced. You could watch that, or you could watch the beginner, which is right over here, ETU Mastermind CRT Bootcamp. I could share this to you also. How do I share this?
CRT.
Oh my goodness. Shit. But I suggest after you finish it, you straight go into this, because this is more older, right? Which Romeo himself talks about this whole thing. Everything I'm teaching here on this specific bootcamp is already Romeo's preaching on all of his courses. But this one is the one you should be focusing on afterwards, which is very advanced. So I suggest, you know a lot before doing so. But yeah, right over here, I could share this also for you. Let me get it right over here. All right, so that's the first step. Okay, now let me share my chart again here. Share that shit again. Sharing. Let me go back to the chart. Full chat. All right, so let me share my screen. So you're very new, so I'll primarily suggest watching that first before we even go further. To be honest with you, because that what I'm gonna say is gonna be very difficult for you to understand, because I'm gonna overwhelm you with with information that you don't need, right? So information overload, which is gonna make you confused even more. But I will still do it. I will still help you out. But yeah, that's all. But so the way to pick the right CRT, as you mentioned on the Instagram and the SMT, which we're gonna talk about also, you can see this key level right over here, got SMT'd on. And if you go to the quality asset, you got tapped in reverse, right? Which we're gonna talk about that, which is primarily on the time-based SMT, right? Which we're gonna talk about also. Now, how to pick the right CRT in your perspective? Since you're beginner, you won't be able to question it and answer the question. But how do you know in your perspective how to pick the right CRT?
When we sweep either the high or low.
High or low? Okay. Hey, that's a good very start. That's what I do, man. That's what I do right over here, right? Sweep out a daily low, and this is how you pick the right CRT. That's a good start. To go more in advance, right? Go more in depth. Like, this is primarily in the higher time frame. So on the lower time frame, on a 4-hour time frame, what you do? Like, as you guys know, you're supposed to scale down. So let's say you start from the monthly, you scale down to all the way down to the 4-hour time frame and catch the lower time frame risks and higher time frame reward, right? You know what that is or no? You don't, or you do?
Yeah, I do. Just like top-down analysis.
Yeah, so you go, so you go down, you risk the 15-minute time frame, and you target the weekly or the monthly possibly, right? So on the 4-hour time frame, how would you pick your CRT?
Same like sweep of the previous high or low.
Okay, that's a good start. So basically a daily profile CRT, right? So basically 159, 159, or 5 a.m. accumulation, 9 a.m. manipulation, or 1 a.m. The age detection range, and 1 a.m. soups of the age detection range eventually expands from there on forward, right? That's also a good thing that you did. Now, since you already know that a little bit, we can go further from here. So the way you pick the best CRT you trade and the highest probability CRTs are going to be based on the very higher time frame, right? So you're gonna start from the 3 month. Now it may not make sense for you right now. Like, what am I supposed to go on a 3 month time frame? I'm supposed to make. I'm trying to make money, but this is how you pick the highest probability. So, because you guys know, man, as you see in the lower time frame, like in a 4 hour time frame, um, all of these are CRT, brother. So it's gonna be difficult for you to understand which is the one to high likely perform, right? Because if you were to pick this one, you would have disrespected, right? You would have been there's so many, right? You're gonna get confused on which one to pick. So when you go from the higher time frame and you scale down to the lower time frame, you're gonna be right spot on which one you're looking for specifically, right? Then you're gonna know your right CRT and the best CRTs, right? So the first thing, we're gonna start from the 3 month time frame. And I'll also have you ever analyzed the higher time frame, like the 12 month, 6 month before?
No.
No, and I suggest from now on forward do that, because the 12 month they can't really have the time on there, but the price is really matters a lot, because you can see in a 12 month time frame we're clearly going from a range low to range high, right? So this pullback, it's just it's just a pullback to go up high, right? Because as you can see, to go to 6 month time frame to get more in depth, right? On the 6 month time frame, this is just a false market share shift, right, to the downside. Eventually, you can see you will rally back to the upside, right? If you go back in time, false market share shift, a huge rally, right? Again, here, what's another example? False market share shift, a huge rally from there on forward, right? So false market shift are a SMT or total super mean, right? Now SMT, which are the same thing. But from now on forward, I suggest you analyze the higher time frame. Only analyze it every month, right? Only one time a month. That's all you need to do, right? After that, you should be chilling. But on a 3 month time frame, you should be analyzing it every week, every Sunday or Saturday, right, at the weekend, so you can get sharper on your higher time frame analysis. So if you make a mistake in lower time frame, you go right back to the higher time frame, you analyze, and you go on from there. But the way to pick the right CRT is always going to be from the 3 month time frame and and above. But I suggest not go to 6 month time frame, because there's no time base, as you know, market moves according to time, right? 3 month time frame is a quarterly candle, quarter 1, quarter 2, quarter 3, quarter 4, right? So market moves based on time based rather than price based. On a 6 month time frame and above, it's always price based, but below that is always going to be time. Now you can see on the 3 month time frame, this is where we're going to start to pick the right CRT. Now if we go back previously on a chart, we see that this is a quarter 1 of this year, right? Quarter 1.
Yeah.
So quarter 1, you can see, was pretty clean, right? This quarter 4 of last year was accumulation. Quarter 1 of this year was manipulation. Quarter 2 of this year was expansion. Quarter 3 of this year was a manipulation. Quarter 4 of this year is highlighted to be expansion away from the level and targeting the higher time frame key levels, right? So all we're looking for on the 3 month time frame is AMD, right? Accumulation, manipulation, expansion, or CRTs, right? That's all we're looking for, right? We're looking for quarter 1 accumulation, quarter 2 manipulation, quarter 3 expansion, or it's not always going to be quarter 1 accumulation, quarter 2 manipulation, right? It's going to be sometimes quarter 1 manipulation, quarter 2 expansion, or sometimes going to be quarter 1 accumulation, quarter 2 manipulation, right? It's going to always change. If you were to stay the same, people are gonna start catching on, be like, okay, yeah, this quarter is gonna range. I'm not gonna trade this quarter. Next quarter is gonna just soup out the first quarter range. We just go up higher or lower, right? If it were that easy, people would have started catching on, and you would have been tradable. But that's the first step. Is always on a 3 month time frame, is always looking at in the term of AMD. So accumulation, manipulation, expansion, or AMD is basically CRT or market maker models, right? They're always linked into CRT. So CRT is basically first candle accumulation, second candle manipulation, third candle high likely expansion, right? So that's the first step, which we're gonna start from the 3 month time frame. The next step on a 3 month time frame is gonna be on looking at the chart. Okay, where's the market trying to go? Is there a range here on like, you know, price-based range, right? You can see right here, we have a range low, a range high, right? Now, if you go to the higher time frame, that clearly looks like a higher time frame range, right? So we could determine, okay, this range in a lower time frame, it's just a range in a higher time frame, right? It's just a CRT in a higher time frame, just an AMD in a higher time frame, right? That's the second step. And the second step, as I said before, you're looking for your, you know, SMT, right? It's right here, SMT. You're looking for your key level, your fair value gap, your order block, your IRL to ERL, right? That's what you're looking for. The third step, which is the most important step, is going to be looking for time, right? As I said at the start of the lecture on the 3-month time frame, is going to be based on Q1 manipulation, Q2 expansion, Q3 another manipulation, and Q4 another expansion. How come it's Q3 manipulation? Because Q2, after expanded, after he met his target, he eventually became a range to trade again, right? So the third step, which is the most important step, which is thinking in terms of time and thinking in terms of logical, right? You always gotta think in logical senses, right? You can't think like, yeah, what if the market does this, right? You always gotta think in terms of, does it make sense, right? Always think in logical terms. Now that's the second, and that's a third step, and the most important step is always thinking in logical terms, and also using time, right? Using time in your advantage, because when you use time, you're somewhat gonna get more confident, right? You're gonna get confident in your bias. If you analyze the 3-month time frame constantly, right, and it goes in your way, you're gonna know, okay, this concept works. I'm not gonna change my strategy. I'm going to constantly, because I was right this past, you know, year or whatever, right? On my analysis on the higher time frame. So I know this concept works, but all I gotta do is just scale down to the lower time frame and execute the lower time frame and target the relatively higher time frame than the lower time frame and make, you know, more than enough, right? So that's the first step of you picking the right CRT. The second step is scaling down from the 3-month time frame to the monthly time frame. So what we're gonna do from here on forward, right? We're gonna scale down from the 3-month to the monthly, to the weekly, to the daily, and to the 4-hour, to the 15-minute time frame, and go on from there, right? And keep in mind, this video is gonna be recorded, so you're gonna see it on YouTube. So if you don't get all the information you need right now, it will be uploaded, right? So you get the first step or no?
I do.
You do? Because
Yeah, I do.
you're like, you know, your Wi-Fi connection is kind of bugging. But so the second step of you picking the right CRT is going to be scaling down to the monthly. So as I said before at the start of the video, start of the recording or the one-on-one session, that you want to go in depth, right? I don't want to go and analyze the time frame, and I don't know what I'm doing in the lower time frame, right? So I want to go in depth and make it have sense in the lower time frame and connect it to the higher time frame, right? Usually market will always connect to each other, and the market is in a fractal nature of price. So same thing that happens in a 3-month time frame will happen in a 5-minute, 1 minute, 3 monthly, weekly, daily, 4-hour, 1 hour. So everything will happen the same way, but the time shifts, or the time is just slower, right? A 1 minute prints every minute, but a 5-minute prints every 5 minutes. So there's different time that it prints, right? That's the only difference. But the concept, the pattern is still the same, right? So once we get a 3-month time frame on how to pick the right CRT, we're gonna scale onto the weekly, onto the monthly, right? On a monthly time frame, what are we looking for? Do you know what we're looking for here? CRT?
Yeah.
But yeah, see, same thing, we're looking at a 3-month time frame, but we're looking at the same thing on a monthly time frame. Same thing again, right? We're looking for the same good old concept, right? Because fractal nature of price. So on the monthly time frame, we're looking for the exact same thing, AMD, CRT, right? That's all we're looking for. On a monthly time frame, you can see right now on EU, we have a monthly CRT here, right? Monthly CRT,
Yes.
accumulation, manipulation. This is highly likely going to go in expansion. Now, this can go down and, you know, go do some sort of OTE, but we do know if we scale down even lower time frame, that could possibly happen or could not possibly happen, right? So that's why we got to scale down even lower. But we know this is highly likely to work out in our favor on the longer term basis. The next 2 to 3 months, it's going to work out, right? So on a monthly time frame, we're looking for the exact same thing, and we're looking what else we're looking for that I've mentioned on the 3-month time frame. You know? You there?
Yeah.
Yeah, so what we're looking for on a monthly time frame that we spoke on the 3-month time frame. Because I'm saying this to make you, focused. Because I don't want to keep on yapping, and you're not in track. That eventually this is useless.
Okay.
So what do we speak on a 3-month time frame that we need to apply in a monthly time frame? Say it again, please. Again, what?
To target the CRT high.
CRT high. Okay. So yeah, I mean you're new, so I don't want to keep on saying okay this advanced question, but what we're looking for the same thing, right? So what we're looking for on a monthly time frame is time, right? Time based CRT. So first candle of this first candle accumulation. So the the quarter three's second month was accumulation. The third month of the quarter three was what? A manipulation. The month one of the quarter four is an expansion. So we're looking for time based again, right? That's all we're looking for. Now, once we have this in a monthly time frame, what else we looking in a monthly time frame? We're looking, as also you can look for some sort of key level right here, right? Old low, right? Key level, and also you could look for. I suggest not looking for the key level. The key level doesn't matter on the monthly time frame. Market usually cares about the CRT and the time, because the way now. But when wondering how do I know this lowest place? Guess what we're gonna do? We're gonna scale down even lower time frame to determine that if the lowest place or not, right? So don't worry about that. We're gonna talk about all of that shit right in this one-on-one session with you. And then the weekly time frame. Once we got the monthly time frame, we're gonna scale down to the weekly, right? Step by step. We're not. You see I'm going step by step. I'm not saying 3 months to the 4 hour. I'm going step by step so it can make it very clear for you. And it helps you pick the right CRT. Now on the weekly time frame, in your eyes, what do you look for again?
We look for same CRT.
Again, you see, we're looking for the same good old thing, right? In the CRT. Now, on the weekly time frame, there are multiple CRT here. There's multiple candles. So we're looking for which one? Which one are we looking for?
Time-based.
The ones that go with your higher time frame, right? The one that goes with the monthly and the 3-month, right?
Yeah.
So you see how now instead of you looking at all these weekly CRTs, because every candle is actually arranged, right? Instead of you looking at all these candles, you're looking now for a specific one. You're looking just for one specific one that goes with a monthly and a 3-month time frame CRT direction. On the weekly time frame, what we got here is a weekly CRT right over here, right? And I don't know why I got that drawn up. But right over here in a weekly time frame, we have a weekly CRT, right? To the upside. So now I don't care about these, these other candles. They're just random candles for me because this one right here goes with a higher time frame. So I'm gonna stick to this. Now also on the weekly time frame, you gotta focus on time again, right? It could be week 1 accumulation, week 2 manipulation, week 3 expansion, or week 4 accumulation, week 1 of the next month manipulation, and it eventually goes on from there, right? Sometimes it could be week 1 expansion, week 2 accumulation, week 3 manipulation, week 4 expansion, right? So you gotta think based on time and logic, right? Don't make shit up. Think on logic, because market makers, right? They're the same. They're human as us, right? They both are human, right? They're human. We're human. They just have more knowledge than us. They just have more money than us, right? That's all they have, right? So at the end of the day, they're human being. So if we think like them, we act like them, we're gonna high likely catch their type of trades, right?
Right.
So on the weekly time frame, we're looking for same thing, right? CRT and time. Now, sometimes the market will not do the week 1 accumulation, week 2 manipulation. Sometimes just go based on price, because weekly time frame, yes, it's important, but is not as important as the monthly and 3 month time frame, right? Because when you go down to lower time frame, especially in the weekly, what I see, market does not go based on week 1 accumulation, week 2 manipulation. You usually go based on price type of CRT. But since the weekly time frame is that type of time frame that does that, on a daily time frame is when we're looking for time based a lot, because what's happening on the daily time frame? There's a lot of candles, right? You can see there's way more candles in the weekly time frame, right? So the weekly candle time frame is already done, right? Now there's the next step. Now once we get our weekly CRT and the time based CRT, we are scaling down to the daily, right? On a daily time frame, now we're focused on key levels. We're focused because daily time frame, there's a lot of more candles prints. There's more for variety, there's more order blocks, right? There's much more candles that print. So we care about the key levels, dumps, the pumps above old highs, dumps below old lows way more than we do than the higher time frame, right? Because lower time frame, more candle prints. That means more key levels are getting printed. That means market may do sharp retracement before expansion, right? So on the weekly time, on the daily time frame, all we're doing here is looking for multiple things. On this time frame is the most difficult time frame. You have to look for multiple things here, right? We're looking first for time again, looking for CRT. But when we're looking for CRT, we're looking for specific CRTs, right? Which is time based, and we're looking for up above and down below's old highs and old lows. Now, to you, what is an old high and old low?
I can swing points.
Say it again, like because your phone is hard for me to understand your words.
Like swing points.
Swing points. That's what you think highs and lows are?
Yeah.
Okay, so that's the next thing that we gotta talk about is that is not how it goes, right? The market goes based on, right? This candle, it may not look like it's an old low, but it is actually it is actually a low, right? It's actually a low, right? So when I talk about dumpers and old low or pop above old highs, we're just looking for daily CRT getting souped, right? Because on a lower time frame, that's an old low there, right? On a higher time frame, it didn't look like it. So, but we do care about this old high, the swing points. We do care about it, but on a specific time. We care about it on a specific scenario, right? We care about it when it's a daily range, because these old highs, like these old highs, will start to become important key level, which means right, they will get retraded too. They will be the ones to reverse from, right? Which I will show some examples also. Don't worry about that. But when I say we're looking for dumps and pumps above old highs or old lows, I'm basically saying CRTs, right? See, this in the higher time frame, it may not look like an old low, but in a lower time frame, especially in between time frame, it looks like it's an old low, right? So that's what we're looking for. Now, that's step one. We're looking for pop above, dump belows on a daily time frame. That's step one to the daily time frame, because daily time frame is the most important, because this is where we get our setups, right? This is where we try to milk out of the market, because we don't want to. I don't want to allocate 3 month time frame and wait for a hole here to take a trade. That's like, especially with me not being a wealthy man, right, at the moment. So it's gonna be very difficult for me to make any money, right? It's gonna take 50 years for me to even make possibly 100,000 or 200,000 per trade, right? So that's where we go down to lower time frame, and that's where the lower time frame is much more important, right? Now, one thing I say that people get wrong is that lower time frame is important, but the higher time frame is also important, right? So they all matter, right? They all matter. So it's have you heard about the zero property in math?
What?
Have you heard about the zero property in math?
No.
So yeah, so like let's say it's right here, right? So what is 100 times 0?
No.
Yeah, so anything times 0 is always going to equal to 0. So in order for you to get the best setups, everything will need to align. Because sometimes you can have the time right, but if the key level is not there, will that shit work out? No, right? So everything matters. So when I say that lower time frame is important, because lower time frame is much more Canada prints, So it's very difficult for somebody to know where will the market reverse from, right? So, but at the end of the day, they're all important, right? When you psychology, right? If you have the right risk management, if you have the risk control, all of these good shape, but you're missing the edge is being CRT or your whatever you're trading, right? If you don't have the edge or you don't have the right system, all of that shit just made all of that, beautiful thing you have won't matter because you don't have the edge, right? So at the end of the day, in a longer term basis, you're gonna not make money. So everything would need to be there. Everything would need to be equal, right? So that's a little quick, another quick lesson for you, brother. But now on a daily time frame, step one, we were looking for pop above, down below's daily CRT. Step two, what we're looking for again is gonna be time, right? Time. So we know that this week is a classical expansion profile, right? Right? Have you do you know about weekly profiles?
I
Yes?
used to see them, but
No, you don't know
yes,
about weekly
kind of.
profiles? Say it again.
I don't know about it.
Oh, so you don't know about weekly profiles?
Yeah.
Okay, so yeah, don't worry. My boot camp also covered that because there's the first, the video about my CRT boot camp. Yes, is more friendly beginner, so you should definitely watch that also. We'll speak about weekly profiles and the best way to predict them, right? Weekly profile is gonna basically be like this is what's highlighted to happen in the market, so you can predetermine what's going to happen, right? So you may not understand this now, but once after you watch the boot camps and the Romeo's courses, you're gonna eventually know. Okay, now what Taki said on the call now makes sense, right? Because right now you may not know what I'm saying, but once because this video can be recorded, right? It can be posted on YouTube, so you come back to this in the future and look back at it, right? But you're eventually in the future, once you keep on learning, God willing, you're gonna eventually come back and you're gonna know, okay, he was right. This how you will have a better understanding, right? That's all I'm trying to say. So on the weekly profile, we have this week specifically, right? We have a weekly profile, classical expansion profile 2, Tuesday high of the week, which means this Tuesday right over here made high of the week. How does Tuesday make high of the week? Monday accumulation, Tuesday manipulation, Wednesday expansion. Thursday possible reversal, Friday possible reversal. Thursday did not reverse, but Friday did. Now, in your eyes, now why did Thursday not reverse but Friday did?
Maybe there's a key level.
A key level, right? So you see, it's a little bit more difficult for you to you see it's lower time frame, more candle sprint, so you need to pay attention to the key levels, right? So the reason why Thursday did not deliver but Friday did was because it was a key level, right? Now this key level did not get tapped on DXY, but it did get tapped on EU, right? Yes, EU is just a random ass candle, but one quick lesson I'll tell you, another lesson we'll tell you is that always prioritize DXY over anything else. Always, prioritize EU. Always prioritize DXY over EU. Always analyze DXY more than EU because the DXY is much more important because the world currency, right? It runs the world right at the moment. So analyzing DXY will usually give you the best information, the most correct information. Because in the higher time, in the 12-month time frame, there's much more candles, right, than EU. EU, there's not that much candles, so you don't know the full trajectory, right? So you don't know the full story. Let's say. So that's the next step, which is weekly profiles, which is time, right? Time. Now, when you have time, you gotta blend it in with key levels, key ranges, and important key levels, which is gonna be old highs, old lows inside of daily range. And other than that, is there anything else? Nope. It's gonna be other than that, it's gonna be what? Yep, there's one more thing you gotta pay attention to. It's gonna be a key level, right? This is order block. Right? In this case, this candle right over here is an order block. You can see which got retraded to. Now you can see also this candle right over here, also an order block. which always gets retraced too. So these type of order blocks, they will never get left out. So the market will over retrace to it. So when it retraces to it, you know, okay, there could be a possible deep OTE, because this right up here could be a deep OTE before another lick, right? You know what OTE is?
Just like 50%.
Yep, so
Of the
OTE,
range.
that's basically big retracement. Usually OTE can vary. Sometimes it's going to be 50% mark, sometimes it's going to be a deep one like this, or sometimes it's going to be a quick and go right back down, right? So this will help you determine whether it's going to be a deep one or not. So on the daily time frame, after you get your time, you're going to focus on what? Price. So your price is going to be, before we go to the price, we're going to need to talk about more about time, right? Because now when you use weekly profiles, when you learn it, you're going to need to match it up with CRTs, right? So on a classical expansion profile 1, which is Monday low of the week, which is going to be Friday accumulation, Monday manipulation, Tuesday expansion. When Monday manipulates, that means it's highly likely going to create the low of the week or high of the week, right? Now the next profile is going to be classical expansion profile 2, like this example right over here. Tuesday high of the week, Monday accumulation, Tuesday manipulation, Wednesday expansion, which makes the Tuesday candle high of the week or low of the week. The next weekly profile is going to be constellation reversal, which is going to be Tuesday accumulation, Wednesday manipulation. Wednesday manipulation and Thursday expansion, Friday another expansion, or he ranges off for the week. Now the next one is going to be the constellation reversal, which is going to be Wednesday accumulation, Thursday manipulation, Friday expansion. Or it could be like this: Thursday accumulation, Friday manipulation, Monday high likely expansion to possibly right around here, right? So you can see the weekly profile had to be determined with time even further, right? Because weekly profile are basically time. Now, I can show you real quick all of the weekly profiles. This right up here is a classic special profile 1, Monday low of the week, and you can see in this specific time there was no Friday minute accumulation, right? Money just expanded. Sometimes you could definitely do that because it's not always going to be perfect, right? So we have right over here classical expansion profile 1, Monday low of the week. Is there another example here? Right over here, midweek reversal, Wednesday low of the week, Tuesday accumulation, Wednesday manipulation, Thursday expansion, eventually Friday ranges off, or just whatever, right? Now, what will be another example I can give you here would be Thursday consolidation reversal, right? Right over here, Thursday half of the week, Wednesday accumulation, Thursday manipulation, Friday expansion, eventually another expansion until the target gets met. Now, another example would be this week. Consolidation reversal again. There's a accumulation, Friday manipulation. Now, how do you know that Friday will manipulate and how do you know that Thursday will not manipulate and it will be Friday? It's going to be price, right? Because he level, right? So that's the next aspect, the next step, which is going to be time. Now, the next step is going to be key level, your price based. So for price, you're looking for multiple things, right? So for price based, what to you specifically, what's your key levels? You bugged out, brother.
Value gap.
Provide gap. What else?
Breakout block.
Okay. There's multiple order blocks, so it's gonna be difficult for you to understand which order block. And the order blocks, don't worry about the order blocks. I already made a video on that a couple of days ago. You can watch that also. They will help you with order blocks. So you only use provide gap and order blocks and old highs and old lows.
Yeah.
All right. Okay. That's all right. Now, the key level that's very important to the market makers, right? As I said before, the market makers, they never buy high, right?
Yeah.
They never sell low. So the specific concept which I'm going to talk about, they align to the market makers, right? And also time. People wondering like time. The market makers don't give a fuck about time. They actually do, because the market makers goes based on time. You know, the international bank, the central bank, all these banks that are very important. The World Bank even, they move during time, right? They move during the Pacific time. They don't go based on like at 3 a.m. in the morning, and especially in my time, right? They won't move at 3:30, 3 a.m., right? They closed, right? So they move during Pacific time. So that's important. Now, the concept of which I'm gonna talk about right now, which you probably already heard of, which, you know, if even if you didn't heard of, you're gonna learn it, right, eventually. So the concept I'm gonna talk about right now, which are the most important concepts, right? Which number one is gonna be daily ranges, right? You know what daily ranges are or no?
Yeah.
Yeah, so by premium discount, etc., right? So the next concept is gonna be old highs and old lows and important key levels, right? Old highs and old lows can be this old low, old high. Next one is gonna be the important key level. A important key level, which is basically a important old high, old low, is basically a old low that broke a high and a high that broke a low. Which, if this what do you call it? Where's a good example? Is there any good example? Let me see. Let me see. I have to go to the spot in order for me to EU, in order for me to look at it. What's a good example? Would be right over here, right? This old high, this high broke a low. So market is gonna retrace to this old high before going down where? Lower, right? So it's an important key level, right? How is this important key level? Because this high right over here broke this low, which makes it automatically an important key level, right? That's an example, which I already made a video on this also. I'm probably gonna make another video on it. But that's that. Important key levels. The next one is gonna be specific order blocks. And now that's important, and fair value gaps. Fair value gaps, in a daily time frame, brother, I don't give a fuck about these fair value gaps, bro. I only care about the 12-month, the 6-month, the 3-month time frame, the monthly time frame fair value gaps. The weekly, I don't give a fuck. The daily, I don't give a fuck. I care about the time on the weekly and daily because the smart counts at print. Okay? There's a lot of fair value gap here. Fair value gap here. There's IPG, another IPG, another fair value gap, another fair value gap, right? So there's multiple. So lower time fair value gaps are bullshit, right? So you want to focus on old highs, old lows, important key levels, daily ranges, and specific order blocks, which I spoke about on my other video a couple days ago, which you should watch also. You should watch it also. Now, other than that, what are we looking for? Do you know anything else you're looking for in a daily time frame? No?
Hello.
Okay. You're right. We're not looking for anything else. That easy, right?
Yeah.
See,
Kind
see, we're
of.
not looking for so many shit. We're looking for specific things. Now, on a lower time frame, once we get that daily time frame done, we're gonna scale down to the 4 hour. Now, this we're looking for specific candles, right? In a 4 hour time frame, we're looking for time again. We don't give a fuck about the key level. We do care. We do care about the key level during a specific scenario. The only time we care about the key level is when the market is rallying. Gold, right?
Yeah.
So it's constantly going to all-time high. So during that time, we care about the fair value gaps, we care about the order blocks, we care about all of this in a lower time frame for a key level. But usually your key level on a 4 hour time frame, if the market is not trending, on a big rally, is always going to be a CRT. Your CRT is your key level. Like, as I said, CRT is basically old highs and old lows. So they act like as a key level, right? So on the lower time frame, I don't have any good examples on these days, but we can go back and further. But on the lower time frame, before we go there, the lower time frame, all you're looking for is what? Same thing again. Time, which is going to be either age addition, accumulation. What session do you trade right now? What session do you trade before we go on further?
London.
London? Okay, perfect, right? The way you're going to trade London is going to be A decision accumulation, then decision manipulation, and usually it's gonna be sometimes expansion also, or it's gonna be manipulation, eventually New York expansion, right? So we're looking for the same thing, exact thing here, right? So we're looking for time again, and when you're looking for CRT, it's always going to be these specific candles, so it's going to be the 8 decision range, and also you're looking for time more. Now you're looking for in-depth time. What I mean by in-depth time is going to be Pacific time, because on a daily candle is 24 hours, right? And we know the market does not work during the 24 hours. They work specifically they work during Pacific hours where the market is very volatile, which is for London session 3 a.m. to 5 a.m., right? So if we trade 3 a.m. to 5 a.m., we know that, okay, this time is when we're looking for beautiful setups, right? So that's what we're looking for in a 4 time frame is always going to be even more in depth, right? Now we're looking for Pacific time, which is going to be London session 3 a.m. to 5 a.m. For New York is going to be 6 a.m. to 10:30 a.m. for manipulation, okay? For manipulation, that's what we're looking for. Now for London session, it's always going to be 3 a.m. to 5 a.m. because right when you're 5 a.m., usually market like to chill off, right, for like an hour or so before going forward. So if you enter 5 a.m., you're gonna get chopped up, you're gonna get fucked up, right? So which we avoid. Now that's what we're looking for. That's what we're looking for. That's all we're looking for in the 4-hour time frame. CRT, and the only time, keep in mind, the only time you're looking for your key level, like your order block, your fair value gap as a key level, is going to be when the market is in a trending market, when the market is constantly rallying, like Bitcoin or like gold is constantly going up or higher, right? So that's when you care about the key level. Other than that, your key level is going to be CRT. CRT itself plays a role as a key level. So now once you get the lower time frame, the 4-hour, you're gonna scale down to the 1 hour of 15-minute time frame, right? Now I don't have a good example, which I will show you example. I will only show you one example because it's already like a 49 minutes recording. But in the 15-minute time frame, what are you looking for here, brother? You should be able to answer this, right? So what are we looking for in the 15-minute time frame?
For time.
We're looking for time. No, we're not looking for time anymore. We already spoke on that. We are looking for time, but the time is going to be not as important because how you gonna what I talk about right now is useless without you doing what? Executing, right? Without you actually profiting from it is useless, right? So I could have all the knowledge. I could have the knowledge to become a billionaire. I could have a goal. I could have like a whole a journey to it. But if I don't take action, does it matter? Yeah, it doesn't matter, right? So you go see that says it doesn't matter. What you're gonna do in the 15-minute time frame, you're looking for execution. You're looking for your entry model. Now, what is your entry model right now?
Look for state of delivery.
State and change of delivery, so model 1. All right, so we're gonna fix that up also. Have you ever heard about Turtle Soup before? Turtle Soup?
Yeah.
All right, so what we're gonna do here is we're gonna I'm gonna preach Turtle Soup to you, but brother, don't trade Turtle Soup right now. I suggest not because it's very difficult, right? You gotta be very advanced. You gotta be very conscious on what you're doing. But what I suggest right now, you just stick to model 1, right? So I've already made a video on Turtle Soup before. You can watch my Turtle Soup entries. You could do all you want. I'm not gonna make you have a limit. But as a starter right now, focus on model 1. You can get like little because Turtle Soup, yourself is wrong. You're gonna get stopped out, right? Which you don't want, right? So right now your entry model is very good. Don't enter the fair value gap. Don't enter the fucking breakers. Primarily enter the model 1 and the types of model 1, right? So now you see the on the general chat, I sent a video about the CRT model 1 subtype on Discord. I shared a video on it, right? You see it on right now. You see it?
Where?
Okay, so you see right over there, right? So the CRT model 1 subtype complete guide. that right there is gonna talk about the types of model one, because there's multiple, right? Because sometimes the model one, right, is very thick. The market will usually go to the threshold of the model one, then reverse, right? Sometimes it's gonna be very small.
Yeah.
The market is gonna tap the wick and reverse. Sometimes the wick of the model one, basically the resistance block, is so big that market will go back to resistance block because it's basically imbalance, right? We tap the imbalance, which is the resistance block, then reverse, right? Or sometimes on the resistance block, they could be old high or old low. Market will see what the old high or old low in the resistance block without respecting it, then reverse, right? So there's a subtype right over there, which you can watch also. Now, that's what we're looking for between time frame. Between time frame, all I'm looking for entry models. Looking for time again. As I said on the 4 time, we're looking. As I said in a 4 time frame, we're looking for time. But on the hourly, on the between time frame, we're also looking for time because you have to mark out, right? You have to mark out the 3 a.m., 5 a.m., right? To know, okay, during a specific time, I'm trading. Anything after this, I'm not trading it. If I get an entry model before this time, I got trade. I'm waiting for a new old high to get souped, then trade, right? So we look for a specific time to trade because the 3 to 5 a.m. is a manipulation time, right? Which market will usually high likely if it reverses, if it when it manipulates during that time and it gives you confirmation, you'll high likely work out in your favor until the target gets met. So I'm gonna show you an example right here, which is gonna be this week. This trade right over here, I'm gonna show you. I did made it, and this trade didn't go in a win because I broke even because I had my entry model wrong. But we're still regardless gonna think about it because this was a good example that I could talk to you about. And also, as I said, you can see market needs to retest here, and during that time I did not know. You know that, brother. I make mistakes. You make mistakes. We're human at the end of the day, right? So
Yes.
what we're gonna do here, since we have the 4 time frame, right? The higher time frame, I'm already here, right? So let me go to the higher time again, right? Give my time frame, accumulation, manipulation, expansion, right? Step 1. Step 2, again, accumulation, manipulation, expansion. Step 3, right here again, CRT to the downside. So CRT soup. I'm trying to go down to the lower time frame and target the CRT low right over here, or some other CRT low also, right? Now, once we get that, we're on the low time frame, daily time frame. During that specific time, we had a daily CRT, right? This right over here. Tuesday accumulation, Wednesday manipulation. I thought that was gonna be expansion, but as I said, during that time I was wrong. But I still profit out of it, right? Although I broke even, but they hit my target because I got a little greedy, right? So that happens, right? Which it will never happen again. It will never ever happen again. But here's what it is, right? So on the daily time frame, looking for the same thing here, right? And this time we had Tuesday accumulation, Wednesday accumulation. So I was looking for Tuesday accumulation, Wednesday manipulation. Keep on saying the wrong words. And eventually, once you get that done, we go on to lower time frame. Lower time frame, what we're looking for here is a position as a range, either the 17 o'clock or the 21 o'clock, depending on which is getting respected, right? Once we mark that out, we're going to mark out the CRT high and the CRT low. We look for a soup at a specific time. Now, if it does get soup before basically liquidity sweep before the right time, we're not gonna enter. We're gonna wait till the right time occurs. Then we're looking for the right time purge, basically liquidity sweep again or total soup. Then we're looking for reversals, right? Now, also you can see how I marked out the 50% mark of the CRT, which is important. So 50% mark of the CRT we usually always get met, but during this time, you can see in the daily time frame, right? During that time, this range, what's happening to this range?
Golf field.
He is going through it, is breaking through it, right? So it's clearly not getting respected. So it's stupid for me to target CRT low over here. It's stupid for me to target the CRT low over here, because it's highly not going to reverse. So me targeting the 50% mark of the CRT is going to work out in my favor. Me targeting the 50% mark of the daily range in a Pacific day is going to be, much more profitable than me targeting the CRT low, because I would rather be break even, or I would rather be, take a small win than make fucking nothing, right? Or lose money, right?
Yeah.
So that's the next step. So now once you go to the lower time frame, you can see lower time frame, CRT high got purchased way before 3 a.m. So as I said before, on the lower time frame, you were right about what you said, earlier. You said about we were looking at a 15 time frame, we're looking for time again, right? So we're always looking for same thing, but clearly not to lower time frame. I do give you credits for that. I wasn't gonna speak on it, but you got it, right? You learned it, right? So on a 15 time frame, we're gonna mark out our time. So since you trade long session, you're gonna mark out 3 a.m., right? You're gonna mark out 5 a.m. So between 3 a.m. to 5 a.m., that's when you're looking for a setup. If you don't get a setup by 3 a.m. to 5 a.m., guess what? Wait till next day. You don't get a setup next day? Okay, guess what? Next day, right? Because the market will not always give you the market will not always give you high quality setup. And what I'm preaching right now to you, the right CRT, how to pick the right CRT is high quality. Basically, this has a high chance of likely delivering to your directional strong liquidity, right? Than not, right? So it's very important for you to change this, because when you trade like this, you will miss out. You will not trade like most of the days out of the week. You're probably gonna trade like one time out of the week or 2 times out of the week, which is beautiful. Why? Because one trade, if you're trying to get a funded account, one trade will make you pass phase one, because it's a lower time for risks, higher time for reward. Now during the specific time, my target was supposed to be here because my rule was set to get out here, and I got greedy. What happened to me? I got broke even, right? So usually your trades are not gonna be like this. Your trade's gonna be down below here and even lower the higher time frame target. So it's gonna be lower time frame risks, higher time frame reward. When you lose money on these trades, it's gonna be very little, right? But when you make money, you're very high, right? Because you're risking very little to make a lot of highs, right? To make a lot of money. So when you trade funded accounts, one trade is gonna be make you either pass the account or get out drawdown and get past the account, or just get out of drawdown, right? Just gonna do the job for you. So it's basically one shot, one kill, because these type of setups give you a lot of high RR, especially the total soup entry models, right? Now this right here is a quick total soup setup. I did not enter there. My entry was down over here, way below it, because I messed up, right? But we learn here, right? But you can see this right here will be a perfect example. Now in a 15 time frame, we're looking for time and we're looking for entry model. Now this is one thing I have not spoke about earlier. What else we're looking for is going to be the classical ideal trade, right? Basically, before I do that, I want to show you what I mean, right? So let me share my screen to this specific photo right in here. Go to X. Let me show you. 1 second. Well, get back. Fucking Twitter. Right, you see the screen here. Let me share it here. See it? See that screen right over there?
Yeah.
So this is what we're looking for on a 15 time frame, because 15 time frame, every 15 minute time frame is a candle. So there's a lot of fucking candles in a day, right? I think it's over I don't know, fucking 500 candles. I don't know, right? There's a lot of candles during a specific day. So to avoid us getting confused of there being a lot of candles, what we're gonna do is look at this. This right here is considered to be the holy grail of trading, right? This actually is. This is how all of your trades should be looking like, right? And I've actually also made a video on this also. If you go to, I already made a video. If you go to my recent videos, I did make a video on this. You can watch that to get better understanding. But this is how all of your trades should be looking like, right? So it's going to be first step one, your key level, right? Your CRT or your entry model usually is always going to be your entry model, and that's your CRT. It's always going to be your entry model, right? It's going to be a order block above an old high or a fair value gap above an old high or old low. You see how I said a order block above an old high and not just an order block? Because it's different. An order block above an old high basically means there's enough liquidity pool for the market to reverse from that specific area, right? Now, step one is your key level, right? This is all we're looking for. Step two is your time. 5 a.m. right over here. Step two. Step one, your entry model, your total sub entry models, which I already spoke about, which you can watch those videos. For order block of old high or old low, fake double top, fake double bottom, third drive, all of this you can look for yourself, right? Now, step three right over here, you see, is your liquidity pool. So it's basically considered to be a pre-manipulation liquidity pool. So you're looking for this, the third one to get souped, and we're looking for the third and the one to get souped very specific time. So after the market comes the right time, looking for the liquidity pre-manipulation liquidity pool and the key level to get tapped and souped, right? So that's why it said pre-manipulation liquidity pool. So once it's pre, that means when the time comes right, it should be getting souped, right? So I'll show you an example right here. This example which I'm gonna show you is a perfect example, right? You get the step here. It's very simple, right?
Yeah.
Now you can see market went down, came back up, tap the breaker block or order block, whatever the fuck you're looking for, taps it and reverses, right? Now, based on open, high, low, close, it's open right over here, high, low, and close, right? So looking for open, high, low, close again. And the higher time can be open, high, low, close. Now, one thing I did not speak about on the higher time frame, on the 3-minute time frame, and the monthly time frame, looking for open, high, low, close also, because open, high, low, close is an important concept. Now on a daily time frame, you're also looking for it, but on a daily time frame, all you care about is the is it breaking through it or not? Is it respecting it or not? So you're looking for a daily time frame and a weekly time frame. But on a higher time frame, quarterly or monthly, care about the open, high, low, close or open, low, high, close. Because open right over here, high, low, and close, right? So let me show you a chart example right over here. Let me see if I get that. I'm sorry it takes a long time, but it's worth it, man. That's how you're gonna make your money in the future, God willing, if you fucking stick to it. But if you don't, it is what it is. I do get views out of this, so win-win for you. It's a win-win for me, right? So right over here on the between time frame, what do we have here? The picture I showed you, right? The picture I just showed you, we're looking for the same thing here, right? So step 1, your key level, right? Which is gonna be a order block above an old high. Old high is going to be right over here. This is old high, right? Pre-manipulation liquidity pool. This is your key level, right? That's step 1, step 2, right? Now step 3, which I mean they're not in order, but I don't give a fuck about the order, right? Right here, step 3 is going to be what? Your time, 3 a.m. What's the pre-manipulation time? Which is step 2. Step 1 is your key level, right? Your order block, your entry model. Step 3 is your pre-manipulation liquidity pool. Now, you always need that pre-manipulation liquidity pool because what it means is basically, is there enough liquidity pool for the market to reverse? We know what that is or no?
Yeah, I do.
Yeah, so you already know what it means basically. Is there enough liquidity for the market to reverse potentially? If it's not, it's going to get run through. If it is, cool, it's going to reverse. Because overall, in the longer term basis, it was not enough. Because higher time frame need to go back up higher, deeper OTE. So in a certain basis, it did work out, right? You could definitely cut it short. You got to target the 50% mark of the 4 CRT. I said before, the market is not going to go down lower because market's clearly breaking through it on a daily time frame. So us targeting here and this part right here is much more higher quality. But would you rather lose money or make nothing or make a 6RR? Right? For me, this 6RR for me, and the specific trade was what? It was 3,000, right? Would you rather make 3,000 or lose 500 or make nothing?
I make 3,000.
Yeah, so you won that shit, right? So these setups are very beautiful. They have a high RR. I mean, this setup right here, like on a step 2, on second phase of your challenge account, this setup right here can make you pass it, right? Bang, one trade, right? So when we trade CRT and Total Soup, brother, all you're focusing on is very high quality, high RR setups, right? So you're not looking for a 1 or 2 RR, 1 or 3 RR, 1 or 4 RR. I mean, you're gonna have sometimes a setup where it's gonna be 1 or 2 RR, 1 or 3 RR, but you're high likely you always want to catch trades on a longer term basis, like 1 to 10, 1 to 20, 1 to 14, 1 to 21, 1 to 24, 1 to 30, 1 to 40, 1 to 60 RR trades, right? Not 1 to 2 all the time. Not 1 to 1 all the time. Right? You don't want to catch. I don't want to catch 1 to 2 all the time. But sometimes market may give me a 1 to 6, right? Sometimes market may give me 1 to 2. I'll accept it, right? Because my rules told me to get out here because market's in reverse. The market eventually reversed because my rule told me market is going to expand to the upside because daily candle during that time can't close on a big ass wick because daily candles usually close in a classical expansion, right? They're gonna close in a classical candles rather than a big wick. So it didn't make sense. So it was a breakthrough, especially mention models over here, which means the market doesn't care. What was I gonna say? The market, your entry model where you entered during that specific time, where the candle is matters much more than what a candle is during afterward, right? So the candle over here, it may look like, oh yeah, it's respecting the daily CRT, but during the time I entered, it wasn't, right? It was a clear breakthrough, which means it's highly likely not going to deliver. It's going to get souped out of, right? Which he did. Eventually got, ragdoll. So yeah, that's the quick lesson. Also, that's a quick, showcase on me using it in depth. You get it or no?
Yeah, I do.
So what do you learn from this, man? 'Cause I don't want to make you say useless. Just fucking, do whatever.
I learned how to align time frames, like analysis from higher time frame to
Oh
lower.
yes, yes, yes. Perfect, perfect. Okay, okay. So now is your problem solved? How to pick the right CRT, right?
Yeah,
Okay. So one thing that you mentioned on the Instagram about the SMT. SMT will always need to happen at the right time, right? Especially the time frame you care about SMT that can change your bias is going to be on the monthly, right? And when it happens on the monthly, it needs to happen during the right time, right? Which is going to be did it happen on week 4 out of the month? If it did happen week 4 in the month, it's kind of high likely expected, right? Because if you go back in a hard time from here, let me show you. You see SMT right over here. There's an SMT with this candle, right? How come? Look at the XY. The XY swept it out. SMT. So this candle right over here has SMT. So before you can determine where the SMT happened, will it change your bias or not? You need to go down to a lower time frame on the weekly to determine whether it's going to hold. Because SMT, believe it or not, happened from all over here, right? Now, if it happened all over here, you see a big pullback happen, a big drop happen again, it would have been very difficult for you to know, okay, if the SMT will hold or not, right? So the way you would know that this SMT will hold is that did it happen on week 4 out of the month? If it did, it's highly likely to reverse because usually quarter 4 is now going to be reversals, right? But week 4, Thursday, Friday is going to be reversals, right? You see, this is the week 4 out of the month, so which caused the reversal to occur, right? So that's that. Actually, I can show you a little bit more example right over here. Right over here, this one, Thursday, Friday reversed, right? So Thursday, Friday is reversals. Usually, if SMT happens on those days, it's gonna high likely hold. It's high likely reverse. And on the higher time frame basis, on the weekly, you care about the week 4. Did it happen week 4? If it didn't, okay, it's highly likely to reverse. It's going to get ran through. But if it happens in week 4, it's gonna high likely reverse from there on forward, right? But the SMT time frame you care about is going to be primarily based on the monthly. Now, this is primarily for opposing SMT, which goes against your bias, right? Which can potentially change your bias. Because usually the CRT targets are inevitable. That means they will always get met. The only time they will not get met is when there's a very hard time frame, and it actually makes sense on a hard time frame, and it's a monthly, right? Monthly time frame was market makers playing around there that time, right? The monthly time frame is when the market makers are there moving, right? So, but on a lower time frame, daily, weekly, 4 hour opposing S&T, it's just going to be a pullback if your bias is correct. If your bias is not correct, it's going to be reversal for you because that means that S&T was in the right time frame, right? That S&T that happened that went against you was going with the market, so it's going to highly hold. When it goes against your bias, let's say you're right, it's just going to be a S&T, and it's going to be a pullback, OTE, right? Now you get it, brother? Very long lecture, but it's very important, man.
yeah,
You do?
I
Yeah.
really study.
Yeah. No.
I need to study hard.
Say it again, please.
I said I need to study hard.
A system I had.
I said I need to study.
I
Study
need to
hard.
study. Oh, okay, okay, okay. I was confused. I'm sorry for that. But you know how you're like, I can really hear you because your voice is so low from my end. But I hope you enjoyed this, brother. Did you? I know you learned it, but this video will be published on YouTube, so you can go back at it. Keep on studying it back and forth, right? So once you learn the concepts, right, which you will possibly, inshallah, once you learn it, you come back to this specific video. Now, the specific video right over here will teach you how do you use all those concepts together, right?
Yes.
Now, some concepts that I did not spoke about it, right? The deal range did not teach you how the deal range works, right? Which that right there, you could do your homework and find out how a deal range works. Which I already made a video on it on my boot camp, which you can watch, and you can go on from there, right? Is that simple, that easy?
Yeah, inshallah.
Yep, inshallah. All right, brother. Assalamu alaikum. I will see you later, and the video will be published on YouTube. Yeah, I'll see you out. Peace out, man. Office. Or love. Peace out. All right, chat. I hope you guys enjoyed this one-on-one session, which is it was with one of our members for free, completely free. I'm just here to help out people, right? I don't want to keep this knowledge to myself without me learning, right? I want to learn it and spread out the knowledge, right? Because there's a goal that goes like there will be scholars that will go to hell because they gain the knowledge but never spread it. Right? So you need to gain the knowledge and spread it out. So, because I know when I get older, it's gonna be hard for me to understand these. It's gonna be hard for me to keep it in my mind. So I want to permanently keep it in my mind by speaking about it, by spreading the knowledge, by making it an instant. I hope you guys enjoy. See you guys inside the Telegram. Make sure you guys like, comment, share on the Telegram listen down below. If you want one session, yeah, but you must follow the requirements. Must follow my before doing so. I'll see you guys inside Telegram. Peace out. Make sure you guys follow my TikTok, my IG. Peace out.